Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. Friday saw the highest high since late June. However, it was also a reactionary bearish harami, stemming the rise seen throughout most of last week and indeed since late November. Prices punched up for a second time through the 50% Fibonacci line of the October 2020 to March 2022 move at 85.56, even managing to punch up ever so slightly through the next significant overhead resistance, the declining long moving average, currently at 85.95, but maintained neither and ended up closing down towards the base of last Thursday's support, and that's the combination of the lesser Fibonacci line at 84.40 and the September 2012 high at 84.24. Below, we now have support at the February 2013 high 83.50, followed by some free air that stretches down to the January 2021 high at 82.39. Overall, the market is still within the mid-July, let's say, to late August based bull channel, currently 75.56 to 87.07. There is only the April 2012 high at 86.65 between the top of the long moving average and the upper bull channel line. Finally, the long honeymoon of the rising short medium moving average, currently 78.95, and the rising medium moving average, currently 78.62, is over. What started on the 18th of November has been consummated in the middle of last week into a golden cross. So far today, a gapping lower open, since filled in, that saw the market drop further below the September 12 high at 84.24, but slow up its decline ahead of the next support at 83.70. And the February 2013 high at 83.50. It nevertheless is a significant departure from the recent bullish incentive and may signal a topping action initiated by the close proximity last week to the upper bull channel line. LME 3-month aluminium. A significant departure on Friday from the previous 3 consecutive sessions of indecisive doji crosses. This time it was a bearish closing black marabouts over the lowest close for the whole of last week. The market initially tried, once again, to push up over the congestion at 25.08, managing it but not sustaining it, and prices dropped down to close midway between this resistance and the next support at 24.41. Now, last week I was beginning to wonder if these last 3 indecisive sessions might be a tri-star pattern of sorts. Well, in hindsight, I consider it to be such a bearish pattern, though I have to add, it is one of the most awful such tri-star patterns that I have ever seen. Should it follow through, then the size of the move lower would be to about the $2,400 level. It also puts a big question mark not only over the previous week's weekly key reversal up, but upon 2 other recent factors that indicated a possible topping action actually. The factors were the recent achievement of target X in the 25.60 area. That's the primary target for the late August to early November diamond top pattern, something I've been harping on now for quite a while. In addition to the primary target X, we have a secondary harder to achieve target X1, and if the congestion in the way is to be believed, a much harder to achieve target X1 in the 26.52 area. The second factor is the congestion overhead at 25.63, which, with the aid of the nearby December 2021 low at 25.81, is a gateway to a whole band of overhead congestion starting at 25.63, then 25.81, 26.08, 26.22, 26.49 and 26.66, the August 2011 high, and finally 26.75. The 26.49 level has additional reinforcement from the declining long moving average, currently 26.48. As I suppose so does target X1. Below, well, the next support is at 24.41, which has the short moving average nearby at 24.42. Well, there isn't that much, bar some late November base congestion between 23.65 to 23.90 until the June 2018 high at 23.53, which has just below that some hefty looking support from the flatlining medium moving average, currently 23.45, plus some congestion actually at 23.45 as well. And also the rising short medium moving average, currently 23.37, which may or may not be threatening a golden cross with the medium moving average, additionally on top of all of that. Now, so far today, a gapping move lower that has, as at this time, still not been filled in. as well as a punch down through the support at 24.41 and a considerable way towards the 2400 bearish tri-star level. We are in a fairly free zone now with limited supports until the 23.65 to 23.90 recent congestion, which is an interesting time right now. Thank you for listening. The short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Sales International Limited. And here comes the final bit.